Taken care of holds rates consistent and activity's 3 cuts this year. Central bank authorities kept loan fees at 5.3% and projected they would bring down getting costs in 2024 as the Fed seat broadcasted a vigilant vibe. Central bank authorities left loan fees unaltered on Wednesday and kept on estimating that getting costs will descend fairly before the year's over as expansion facilitates. Taken care of policymakers have been engaging quick expansion for 2 entire years as of this current month, and keeping in mind that they have been empowered by late advancement, they are not yet prepared to pronounce triumph over cost increments. Considering that, they are keeping financing costs at a general that is supposed to burden development and expansion, even as they signal that rate cuts are logical in the months to come. Authorities held loan costs consistent at around 5.3%, where they have been set since July, in their walk strategy choice. Policymakers likewise delivered a new arrangement of quarterly monetary evaluations interestingly since December, and those projected that getting costs will end 2024 at 4.6%. That unaltered gauge recommends that they actually hope to make 3/4-point rate cuts this year. National investors are attempting to direct the economy toward a delicate landing, a circumstance where expansion cools back to typical without an excruciating monetary stoppage that pushes joblessness strongly higher. They need to ensure that they keep financing costs sufficiently high to manage cost increments completely, however they likewise need to abstain from getting out of hand and causing a downturn. The dangers are truly two-sided here. We're in a circumstance where on the off chance that we ease excessively or too early, we could see expansion return. Jerome H. Powell, the Fed seat, made sense of during a news gathering on Wednesday. In the event that we ease past the point of no return, we could cause superfluous damage to work. Considering those dangers, authorities are crawling toward rate cuts just circumspectly. Mr. Powell tried not to give any clue when gotten some information about when rate cuts could begin, in an unmistakable work to keep the Federal Reserve's choices open. Since the Fed has not yet started to bring down rates, in any event a portion of its normal cuts this year could come in the months moving toward the November political decision. That could free the national bank up to analysis. Previous President Donald J. Trump, who frequently pushed for lower financing costs when he was in office, has proactively proposed that it would be political for Mr. Powell to bring down acquiring costs in front of the political decision. Yet, Yelena Shulyatyeva, a senior financial specialist at BNP Paribas, noticed that rate slices were probably going to come well before the political race. Numerous financial experts and financial backers currently anticipate a move in June. What's more, Gennadiy Goldberg, a rates tactician at TD Protections, said took care of authorities could balance any political gamble by clarifying why they were taking their actions, on the grounds that financial circumstances have changed. They will make an honest effort to avoid any view of indecency, Mr. Goldberg said, making sense of that the Fed, which is free of the White House, has changed getting costs in political race a very long time previously, and it's simply a question of correspondence. Rate cuts would flag another stage in the Federal Reserve's expansion battle. Taken care of authorities had lifted rates quickly from WAC 2022 to mid-2023 in a bid to raise a ruckus around town on the economy. In any case, they halted the increments after July, by and large since expansion started to descend strongly close to the furthest limit of the year before.